said, okay, what if everybody did tax planning? What if everybody optimized their situation so that they weren't giving away money they didn't have to? And a trillion is totally doable. One of our older shows actually went through the math on some of that. It's completely possible if everybody were to just get on the ball and do their taxes smartly. So part of what we're trying to do here is to scale that tax saving strategies through technology, through things like this, where we're talking to people through tools that we're putting together, through educational content, courses, all these things. And that's how we're going to get to $1 trillion. And this is me. I'm Neal. I got into taxes because of my own tax problems, which a lot of people can relate to. I woke up one day in 2007 and opened a letter from the IRS saying I owed them $1.3 million. That was my start, my tax journey, because I didn't know anything about taxes, and then got myself into trouble, fixed my own problems. And in fixing my own problems, I found the whole world of Wall Street tax planning, essentially. How could you start saving all of your taxes? Take our starter course. It's very easy. Introduction to setting up your life in a tax efficient way. And you can get that inside of our Explorers group, which we'll get into later on. That's what to do. In the meantime, we'll answer some tax questions. We'll do some review of things. I've got a couple of news items to go over, but I already have the answer to every tax question. And Serena, what's the answer to every tax question?
It depends.
It depends. It depends on facts and circumstances. Facts and circumstances dictate the reality of the situation. I was just reading a tax court case earlier, 30 minutes ago, because that's the kind of stuff I do. There was a guy who, I forget what his business was, but it was a side business. He made $7,000 in. And then he tried to write off Rolling Stones tickets. He wrote off going to basketball games and buying concessions and stuff. And so there's a way to do things and there's a way not to do things. He did it in the way not to do and managed to get slapped in tax court. And the whole thing was like a $3,000 question. And he decided to go to tax court and go through the whole thing, which is surprising. Most people don't actually do that. But he got everything denied. And now he's going to have to pay the difference and all that kind of stuff. So don't do things in the way you're not supposed to do them. As an example, entertainment, like basketball games and Rolling Stones tickets, are not deductible just at all. Doesn't matter if they're anything, because under the Tax Cut and Jobs Act, entertainment became non-deductible, as opposed to before then, it was 50% deductible. So all the box seats that companies used to be at least half deductible, but not anymore, ever since 2017. And it's looking like that it's going to remain that way, because one of the things the new administration wants to do is to pass a new reconciliation bill that affects taxes and make the Tax Cut and Jobs Act permanent. The Tax Cut and Jobs Act is the name of the Trump reform back in 2017, which is coming up on expiration here in a couple of years. They want to get all this done. And there are a number of provisions that are expected to change. If you live and you've been hit by the $10,000 cap, they're expecting that's going to go away, but we'll see, right? Some legislation has to be passed, and hold your expectations until they actually do something. That's the bottom line. Because politicians are all talk until something happens. That may affect some things that are in our tax season that we're starting right now. On Friday, the IRS announced that they are opening for electronic filing for individuals on January 27th. March, I would do it say January 27th, 2 weeks. So in 2 weeks, we will be able to file 1040s. As of tomorrow, we'll be able to file corporate returns. That's usually not such an issue. Everybody wants to get their personals started. Important dates. January 27th, IRS opens for e-filing for most people. January 31st is the day to get 1099s and W-2s filed and in the mail if you're paying other people. March 17th. So March 17th, normally it's the 15th, but this year 15th is on a Saturday. So March 17th is the Monday. So that's when pass-through entities are due. That's your S corporations and your partnerships. April 15th is your regular due date for individuals and C corporations. And obviously, if you file extensions, you get an extra 6 months. So March turns into September, April turns into October. The pass-throughs are always a month ahead of the individuals, because the individual has to receive the information from the pass-through in order to complete their tax return. And then if you do file an extension, remember, it is only an extension to file paperwork. It is not an extension to pay. They want their money. That's the short version. So those are the important dates for this tax filing year. And we are in 2025. we're filing on behalf of 2024. We're always a year behind in the tax world. I'll have a lot of conversations with clients and said, so what did you do this year? And they're thinking about this actual year, 2025. No, when I say this year that we're covering in taxes, which is last year, and I know that gets confusing and I need to be clear about that sometimes. That's just how we talk in the tax world. Okay. Before we get into the questions, I did want to hit this thing that I saw on Twitter just today, actually. This is a situation that I have seen play out a couple of times, and it's worth going over because you'll hear a lot of things in the tax world. So you can do this, you can do that, you can do the other thing, and it'll be so awesome. This guy, who apparently was German, decided to move his entire life to Cyprus to escape Germany's 50% tax rate. And here's 21 brutal realities of tax haven living that nobody warns you about. I don't have to read everything word for word here, but basically, Cyprus, 12.5% tax versus Germany's 50%. Looks great, right? He moves all there. He moves himself, his business, and all this kind of stuff. And he built himself a technically perfect life that was practically impossible to live in. Perfect example, a simple squat rack took 3 weeks to arrive because of EU plus island logistics. That's what it would be. I'd optimize for numbers, not actual livability. And there's calendar restrictions as far as when you can be on and off the island in order to maintain residency to qualify for this tax haven status. Being far away from innovation hubs, it was a real impact. And then he runs into a crisis of identity and whatever. So I think this was the most important. You end up living perpetually at 70% commitment, not fully moved in, not fully invested in the community, not fully building a life. Everything stays in a strange limbo state because deep down, you know, this is just a tax strategy masquerading as a life decision. So I think that was really poignant in that what part. And so I tell people all the time, don't let the tail wag the dog, right? Tax strategy, yes, super important. But when it comes to things like uprooting your entire life, is the juice worth the squeeze? A lot of times there are things you could do that might make sense on paper, but will make your life materially worse. So when you talk to average people not in the accounting world about tax strategy, the one thing that they know is if I have a business and I have a whole bunch of money at the end of the year, I could spend a whole bunch of money and then I can deduct it on my taxes. Yes, that is true. You could do that. There's guys on YouTube trying to sell private planes on that basis. Then there's all the other stuff that comes with buying the stuff that you just bought. One, you don't have the cash anymore. Two, if you finance something, then you have the payments associated with that. And three, if it was something that you weren't planning on buying anyway, or wasn't part of your business or whatever the case might be, then you're just wasting money. What are you doing? So there's a time and a place for things, and you have to look at it holistically and figure out, does this strategy match what I'm trying to do, and B, my actual life? And you just got to keep those things in mind. So sometimes the answer is yes, and you should go ahead and do those tax strategies. Sometimes the answer is no, and you should not. You got to look at things on a case by case basis. All right. So that was my pontification for today. Sarita, what do we have in the defense department this week as far as people coming in with questions? We've been having a lot of questions lately. We have team meetings every morning and we go over all the emails that are coming the last day and everything. It's been a lot.
Yep, a lot. It looks like we have an investment and wealth management question.
Okay.